Boom, boom. What's going on? I hope you're doing well. Welcome back to my YouTube channel. So today we're going to be looking at the markets. Obviously, you guys do know that I'm very obsessed when it comes to the markets. But one thing that I love is that we actually went through some setups, and it was like, one of those powerful setups that we saw, because it came to us that we noticed that it's actually much more important of us to be able to just focus on getting that one trade, but not just securing it. More importantly, being able to just fully capitalize from it. So what I mean by that is that allowing us to be able to just catch that one trade that's going to be able to give us 5 times, 10 times, 15 times more than the rewards that we actually are looking for from the markets. So obviously you are going to be learning some of those things, but on top of that, I am going to be showing you guys some of the setups that we actually did look at. But obviously most of these things were actually things that we done from the mastermind group, so I can't literally share the whole session. I can only share with you guys here what was discussed here and certain things. But yeah, hopefully you guys actually do happen to gain so much value from it. Most importantly, I need you guys to be able to just see the mindset before these trades happen, and at the same time come back a few days later. One thing that I love is that I make my things public, so come back a few days later, look at my trades, look at how they actually went and stuff, and you can be able to just judge my work compared to just I don't know. But yeah, make sure that you enjoy this video. See you in the session. What will happen is that we are going to start off first with the DXY, which is the dollar index. So we're going to be starting first with the DXY. So let me just go all the way back up here on the daily just to see, because I remember even the previous week we did speak about us saying that we're looking for bullish momentum, or anything that can show us that price is actually ready to go up, because we're seeing that here, right here, we've reached support. And obviously now we are seeing that also here we've reached some area of support. So basically here we're in a double bottom scenario on the daily. But if you go low to the 4-hour chart, you'll be able to see that this is just the left shoulder, a head, and the right shoulder, which means that this is a inverse head and shoulders. So eventually it has to break all the way to the upside. So what I'm more likely to do now is I'm just gonna go, let me just clean this up. So what I'm more likely to do is that I'm just gonna go to the 4-hour. 4-hour right here. Okay. So on the 4-hour, like I did say, we've seen this inverse head and shoulders. So how this inverse head and shoulders is this being our left shoulder and head right here, and then maybe our neckline here, and then our right shoulder right here. Boom. And so far we can see that yes, price has broken above head our right shoulder, which is where normally price has to break above, retest, in order of it to confirm its movements to the upside. So here we can see it happen exactly like that. It broke out, came back to retest here. So now there's a high chance that price is ready for the week. We might be seeing price just push all the way up. Obviously, it might not get here immediately because those are long ride, but eventually we are going here. So even if it takes like maybe 2 weeks, 3 weeks, sometimes it can take less than that, but price can just, move in its own ways, and, and then eventually just hit the targets right there. So how we can take advantage of this? So one of the reasons that I'm actually looking at the dollar index is the fact that it will help us be able to understand what to expect from the dollar on its own. So we can see that, okay, no, now since the dollar is actually gaining strength, and here obviously first touch, maybe second touch, third touch here, even if I might bring it all the way down to here, first touch, second touch, third touch here, and you can see this third touch, it respected, even though it wasn't clean, acted as if it broke out, but it came back here with an engulfing candlestick to show that, okay, no, price is still within, like it didn't break below the highest low, which this was a higher high, higher low, higher high, and now you can see a price has formed a valid highest low. So it didn't break below the lows, which means that it's still standing. Maybe some people here would have had like some area of support saying that it should come test here and then go back up, but price normally doesn't move that perfect in terms of it didn't reach that support exactly. But you can see the candlestick confirmation, which is this engulfing candle that shows that, okay, no, we are ready to move up. So with the dollar index, I'm not going to be saying much about it. So what I'm just seeing here is bullish momentums going all the way upwards to our future targets, which is somewhere up until here on the 4-hour. I'm actually looking at it from a 4-hour perspective, because I don't want to look at it from a daily, a 1-hour perspective. Because on a 1-hour, obviously it'll mean that maybe we should have our take profits be somewhere here, our take profits be somewhere here on the 1-hour. But as soon as we break above here, obviously it means that as soon as we break above here, obviously it means that now this area should be support, and then from there it's going to guide us and allow us to be able to execute more buy opportunities. So let's see how we can use this information, how we can use the dollar index in order to be able to make the right choices when we're trading in the markets. US 100 starting from somewhere here. So US 500, you can see even here, this is a trade that we took during the week. I think it was done on Thursday. Yeah, we took this trade on Thursday. So what happens is that you can see, obviously, when you're on the right side of the market, like somewhere here, if you sell, being on the wrong side of the market is much more different compared to being on the right side of the market. If you're on the wrong side of the market, you'll be seeing such moves. You'll be seeing such sells, prices moving downwards, but in a corrective way. It's not too clear. But being on the right side of the market, you're seeing such moves. Like when price is moving upwards, it's moving upwards. It's moving upwards here. It's moving upwards here, and all those. So what happens is that currently with US 100, there's a high chance that we're coming here. So that's one thing you should be on the lookout for. Price is ready. It's never been readier than this. And the best way that we can capitalize on this is, let me just come to the 60-minute. So on the 4-hour, it's literally super clear. But if you just want to see where I'm getting my targets, you can see a previous high. And so far you can see price impulse correction. Impulse, we are now in this corrective phase, and now we just got out of that corrective phase. So it means that we are going to the next impulse. And normally how they'd say that you should calculate your take profit for those impulse corrections would be all the way maybe from here up until here at the start of the phase. There you should take the impulse leg and then be able to just put it you should be able to just put it once the prices or the flag or pattern has been broken out. You should be able to just put it there at the breakout, and that's when it'll guide you into allowing you to know when to catch such movement. So for instance, like right now I can see that this move, there's a high chance that it's going to happen somewhere around here. So with that being said, all I'm going to do is go to the 60-minute and look for my entries. Okay. So there's an entry that we missed out on Friday, but I wasn't too comfortable with taking this trade on a Friday because like it was on a Friday, and I knew that we would hold it. It will need us to hold it. These are those trades that will need us to actually hold them and manage them. So what happens is that price already broke out impulsive. Price already printed out this beautiful correction, this flag, and then price already impulsed upwards. And yeah, we can see price is now progressing to the upside. So the one thing that we can do now is to just basically manage this area right here, because what this does is that you can see here on this resistant, previous resistant, what happened is that price broke out, it came back to retest. This would have been a beautiful entry, but it's okay. Price came back to retest, and then now it's going upwards. So anyway, from here is where we'll be looking for our entries. Sorry. And what we'll do is that we'll allow price to just give us price when it's a bit more cheaper, somewhere around here. So as soon as the market opens, I wouldn't suggest that we buy immediately, even though the risk compared to the reward would be amazing, because look at it, like, you know, our stop loss would be somewhere here, and eventually our take profit would be here, right here, close to a 6%. But we can actually get more from this. Like instead of just the 6%, we can actually get more. And by that, it'll be price, as soon as the market opens, there's a higher chance Asian session, it will just play around. You can play around, go a bit more low, go a bit more, or even if it goes a bit more high and it comes back, go a bit more low. So we can get price at least somewhere around here. If price can just retest this area here, we'll be able to get price there. And the best way that we can also get our third touches, or an area that will guide us into where we are more likely to get our entry, would be us having this management line. Because with this management line, what it does is that you can see we've got this area be our first touch, and it prints our second touch right here. And obviously, even if price goes a bit more up, it will have to come back down to give us a third touch. So a third touch would either be here on the support, or maybe it would be somewhere a bit more further here. But one thing that I like is that even if we catch it somewhere around here, what it would do is that our stop loss will still be here at this level. Our stop loss will never change where it becomes, which is here. So even if our stop loss is here like this, our take profit will still be at the same area. But now what we are doing is that we are playing with the risk compared to reward. It allows us to be able to maximize our rewards while we're still keeping that same risk. While our risk is not changing, we're not improving our risk. We're not trying to risk more for this trade. We're not trying to do anything, but we are trying to gain more from this trade. So that's one of the ways that we'll do. So US 100 is one of those trades that are actually ready, and it's looking beautiful. And yeah, we'll just have to wait for Asian session. Let me just filter out the heavy ones here. I don't want low. I might as well just keep medium. And let's focus more, since I'm a USD. Let's focus more on USD. Euro, it's okay. Let me take out all these things. That's okay. Perfect. There we go. So you can see Monday so far. This is what we'll be getting, which is tomorrow, Monday, 4 p.m. This is like it's literally 30 minutes after US open. You can see we have this ISM manufacturing. We can literally just come here, get more details about it, learn more about it and stuff. But that's the first thing that you can see. So and okay, on Tuesday we will be seeing this job openings 4 p.m. as well, US dollars. And on Wednesday, this is all that's going to be happening. There's all FOMC, which is at 8:30. There's federal what is it? Okay, statement. There's also this ISM once again here, and also non-farm sort of like a non-farm employment right at 2:15. So this is like literally just a few minutes before. So Wednesday is going to be a bit more hectic, looking at news from 2:15 all the way up to 8:30. So Wednesday is going to be one of those days whereby the market is going to be moving super volatile in terms of, from my side, remember guys, I believe that we are very bullish for this week. So if you just catch the right trade at the right time, what it will do is that when these news come on Wednesday and all those things, when they do happen to come, already you'd be in profits, already you'd be on the right side of the market. So you won't have to trade the news in terms of waiting, seeing if it's bullish, yeah, we're buying. No, you already know that it's bullish. The only thing that you need to do now is find those entries and execute on them. Okay, so that's on Wednesday. Thursday, you can see we've got Euro, main refinancing rate, monetary policy statement. You can also see USD year half past two, it's going to be unemployment claims, and as well, Euro is going to be ECB. So on Thursday, it's more about the Euro. The Euro, they'll be basically just changing their things or updating certain things. So you can see here the policy statement, the refinancing rate, and as well the ECB press conference. So this is more going to push the Euro. So if you guys are trading like, the Euro USDs or what, these are things that are going to be more volatile. And Friday, we have as well the NFP, believe here, NFP, we have here unemployment, and we have average hourly. Yeah, basically on Friday, it's just going to be NFP. You guys do more NFP, basically like the market is going to be moving very, very, very heavy. So besides just NFP, because most people, what they do is that they look forward for NFP and they wait for NFP, and NFP comes, it's either the double or triple their accounts or they blow them. So we don't trade like that. How we trade is, yes, these news, we can see that they're coming every single day. We focus on knowing what the market is saying, the sentiment, the bias, and once we get that down in terms of the momentum, we are able to just do what, to focus on being on the right side, like catching those nice bullish moments, bullish entries. And whenever the news comes out, you make sure that you have locked in. Maybe if you are still at entry, just make sure you adjust the stop losses. So if it does happen to spike, maybe an opposite direction, because sometimes when news come out, it can spike an opposite direction. But remember, it doesn't mean that it is going to that direction. It's just sort of like news are a short-term, it's almost like a short-term reflection on the markets, you understand? So when those news come out, it can shoot downwards, but when you shoot downwards, remember, if you're looking for bullish momentum, it'll only shoot downwards towards a specific support that you can have. And once it hits that support, that's when from now on, you can start doing what? You can start literally focusing more on entering another buy, like getting your buys and moving forward with them. But it doesn't mean that now you have to sell because the market is selling, because it can sell 1 minute and you are sitting making profits, you hate, you're like, yeah, let me go make tea. By the time you come back from making tea, boom, the chart went against you and it shot massively to the upside. And you're asking yourself what happened. And it's not even because of the news are wrong or this or you are wrong or anything. No, it's just the fact that you were against the bias, you are against the bullish momentum. So we need to focus a bit more on that. Okay. So that is US 100. So with what I was saying in terms of price hitting take profits, this can be done very, very, very quick, very easy. I see this happening more like on a Tuesday, Wednesday. Yeah, those are the days whereby I see us actually pushing up until. So even if you don't get a clear entry on Monday, it's okay. But I see price pushing all the way up to take profits somewhere around Wednesday. So we should be able to make sure that we get entries before that time, before those hectic news actually comes on. Because if they do happen to come now, when we execute because of them, it'll be us trading news, on which we're trying to avoid that as highly as possible. Because with news, I'm not too sure if strategy wise how we can strategize in trading the news immediately, because they are too volatile at that moment and they need like literally 1 minute time frames and all these things. But the best way is to just continue using our strategy and at the same time make sure that we are on the right side of the market when those news happens to come out. Like for me, when I'm buying and I'm in a trade and let's say it's summer here, let's say price I bought it summer here, I bought here and prices somewhere here. When news are coming out, instead of doing what most people do is they're trying to double their accounts, doing all those things. What I do is that I'll just not like move my stop loss to here and then I forget about it. So even if those news come, I might even wait like 5 minutes. I won't even look at them. I might wait 5 minutes. When 5 minutes, I come back, I look, or maybe 2 minutes later, and then I'll find out that price just maybe spiked upwards, back downwards, and then now it's moving nicely upwards. It still protected me, didn't go against me, and it's still going to take profit. Because most people, what they do is that they'll take their profits being scared of the news, and they'll be like, no, if news comes, it might go against me and I'm going to give back all these profits. But sometimes it might go in your direction if you're on the right side of the market. So you need to be aware of that too. And luckily, if it doesn't go in your direction, already you are in a profitable trade. You don't want to give back all the profits. You don't want to wait for price to go all the way back to hit your stop loss. That's one thing we're trying to avoid. So what you do is that you just allow price to at least take you out with some partial profits, just so you still go back home with something. Okay. So that is US 100. It's a beautiful trade. So I'm still gonna flag it. I'll leave it like this. The session. So one thing that's also helping me in terms of seeing how effective certain things are is that you can see I've got this sessions tool right here. It's free. I just got it here. I came here, then I just searched sessions. You can do this. There's a lot of free tools here on this platform, so you can search them. The one that I use is this one here by Lux Algo. There's a lot of tools whereby it covers like, sessions of the week. You can see all those things. Just look at them. Look at the one that's comfortable with you. The one that I found is this one here. Let me just show it here. So what it does is that it shows, you can see these lines here. They show in terms of days. These are days. This is from Wednesday to Thursday, from Thursday to Friday. So that's what it does. And at the same time, during those day intervals, it shows you the sessions that you're in. So you can see, let me just dive in a bit more deep. You can see New York session, this section, this box that's printed sort of like orangish, it's New York session, and London is blue, and Tokyo session, this one here. So what it does is that it shows me what session I'm in. And I can see that normally when I'm in Tokyo session, which is what I did mention, Asian, which is in the AMs, price doesn't really move that much. You can see your Tokyo session, price didn't really move that much. Tokyo session, Tokyo session, Tokyo session. So that's what I'm saying. As soon as market opens, it will be Tokyo session. From Tokyo, maybe we might see correction, because you can see just after New York, as soon as Tokyo session started right here, as soon as Tokyo session started, price started correcting. Only after London session started, that's when it started like impulsing. And here's where New York session starts, and boom, it shot up. So that's what we can do. Tokyo session might start all the way up to 9. Let me put this here. Where is that? Yeah. Up to 9 would be London session. This is where London session is going to be. So during that interval, what would be happening is, since it will be Tokyo, not much movements will be done. We might just be seeing price play around somewhere here, and then once it hits London, that's when price might be ready for execution. And depending on where it's at, and all those candlestick confirmations, we'll be looking at. That's when, like, if it's a bit more lower, if it's even here support, perfect, we'll be able to buy cheap. Stop loss still at the same level, but now our take profit will be increased to, instead of 4.1, it'll be increased to a 6.9. So remember, same thing, you are still risking the same 1,000 rands, but now you went from risking 1,000 to making 2.9, to now making 4.1, to now same thing, risking 1,000, but now there's a high chance that you can make 6.9. So those are things that we are doing. We are allowing that one trade to be able to make us more, so we know that we do not need to be catching a lot of trades. Like imagine imagine just catching one of these trades. Even if you caught this and it hits take profit in a week, you are done for the week. You don't need, to catch these many trades every single day. You can just manage it. And let's say if you are risking 1,000, you risk 1,000, but you made 6.9. That's what you made for the week. So that's good if you made 6.9 thousand for the week. You might look for more positions to grow if you want to make 10,000 a week, all those things. But if you've made it, then it's good. The next week when you are coming back to the markets, coming back fresh, you're coming back positive because you had a profitable week. And yeah, you're just growing. Every time when you come back on the markets, you are growing, your account is growing, you're also growing as a trader because your skills are giving you something that you can work with. And also with this tool, what it does is that you can see it shows all the sessions that are active. Obviously, right now, market closed. So it closed lastly when it was still active on New York session. But you'll see as soon as the market opens, Tokyo session, that's when it's going to come back. It's going to show that, okay, this is the session that's active. Then it'll show which section is active. The ones that are not active will show inactive. Then, even for those people that are trading other different types of currencies, then which ones you can play around. Like if it's like Tokyo and you're looking at maybe JPY and certain things, that if it's active, there's a high chance that it's going to be more volatile in Tokyo session, So that's one of the tools that I use to I know the times, like I know them off by head, but sometimes I'll just have this and what it does is that it allows me to micromanage. So when I say micromanage, it allows me to go to your 15 minutes, your 5 minutes, and to just see if maybe I can still ride it. Like let's say, for instance, if right here I can see 5 minutes, I've been looking for a buy on US30, and right now I can see we came from London session. Even London session, I didn't get an entry, or I did get an entry, but it's not moving as well. So what I'll do is that I know that right here, maybe I would have this area be my resistance. I have this area be my resistance right here. Resistant. So I'll say that if price breaks above here, I'll be buying, and maybe London session started. New York session started here. You can see, and as it goes, boom, it broke above here. 3:30 is when it broke, and here when it broke, maybe I had a buy stop. Maybe I put a buy stop below, stop loss maybe below here. These because you can see impulse correction. We're looking for the next impulse. I have my stop loss be here, and I ride with it. So maybe riding with it would be, in this case, I'll be looking to just take profit here at resistance. So maybe I'm looking to take profit somewhere here at resistance. I might have this be here, 3.9%. And yeah, it maybe hit take profit within just a few candlesticks. Like it didn't take first candlestick, second candlestick, like 2 to 3 candlesticks it took to hit 3.9%, on which these are 30-minute candlesticks. So it took literally less than an hour, 30 minutes to go all the way up and give it 3.9%. So that's how you can use these sessions when you're trading, sort of like day trading, looking at those smaller time frames. But at the same time, also with swing trading, it will allow you to know and be able to make certain decisions. Like let's say now, for instance, if you're on the 1 hour chart and you've bought US30 and you're looking to take profit maybe in the next 2 days, you do know that in those next 2 days, New York session is going to only come twice. So when it comes twice, maybe New York session pushes price up by 100 points or 150 points. So what it does is that you are able to know that, okay, your take profit might hit within the next 2 days or 3 days, because your take profit is like 300 points away. So it might take at least 2 to 3 days for it to hit take profit. So those are things that you need to be on the lookout for, because most people would have a take profit, but they don't know how long it will take to hit the take profit. So you need to be able to know how long something is going to take to go to a take profit. So you also know what your management is going to be like behind it. Okay, so US30, this one here is also ready. From my side, this one here, I can't really complain about it. It's ready. Okay, so now gold. Let me just clean out the structure here on gold. Clean this out. So normally I don't like cleaning my structures before our session. I want to clean them when I'm on the session, so you guys can also see where I'm coming from, why I'm doing certain things. Okay, let's remove this. Okay, we can even start it here. Okay, so with here, obviously we're seeing the dollar gaining strength, which means that the gold, we're seeing it just drop a bit. So what happens is that maybe price with this can just push a bit more once to the upside, some up until here. this area is an area of resistance. You can see resistance here. From here, it's been resistant, also resisted to break. So you can see price come a bit more up until here resistance. And when it's here, we might as well just get some entries. We saw go here, but one thing that I love is that there's a high chance of us going all the way down to here, because why? We broke below this pattern, and we all retested. So it's a valid set. This is a beautiful setup. It broke impulsively. It retested. So now it still has to go all the way up. I mean, all the way down to the 90% rule, which right here, you can see this way our 90% rule says it's going to have to come all the way up to here. If not here, maybe it will have to come all the way down to here, since this is my actual start of my correction that I do here. So what it does is that the only thing that I have to do now is I'll have to be looking for entries when price is here, and my stop loss might be just above here, protecting myself just above this lower high, and maybe first take profit would be here, giving us the third touch. Once it gives us the third touch, I'll want to see, let's see, once it gives us the third touch, I want to see if price would want to maybe retest, go back up, or if it would want to just break. So maybe once it reaches here, take profit, what it will do is that I'll just have to evolve my stop loss, maybe put it somewhere here, and I increase my take profit. Now I'm looking at this area. So what was supposed to be 5.4% can be easily turned into a 9.9%. Okay. And obviously, if maybe we call it nice, we might as well even get another scale in. Like, let's say scale in would be if price breaks below, retest, and now it's going more down, we are gonna take another trade. So find out that here we built here at 9.5%, I mean 9.9%, but find out that also here we might secure something close to like a 2-3%, let's see, 3%, which we can add them up, like a 9.9%, let's just say 10, rounding it off, and at 3%, let's just round it off to 3. We're looking at a 13%. So if I move you at risking 1,000, you can easily make back close to what? You can make back 1,000 here, or give you 9,000, let's say 10, how we did say 10, and this one here, you are risking another 1,000 here. But since now you have profits that are running, you can risk 1,000 from one of these profits that are running. But what it does is that you can easily also make another 3,000 here. So 10,000 plus 3,000, 13,000 in total, whereby you only had to risk 1,000. And here, the money that you are risking here is profits that you already have. So you're risking profits that are already running. So it's going to be a risk-free trade, basically. I hope you actually had a beautiful moment where you were literally just browsing through, scanning through the markets, learning each and everything that we spoke about. But more importantly, trading is a fun job. It's a fun skill. So once you master it, you'll notice how fun it is. And if you're struggling and if you have mindsets of, no, it's difficult, this and that, obviously it means that you're not trading with the right people. But if you're with us, it means that you're the chasers. You are going to continue chasing. And the best way that you can be with us is by being in our Telegram group, so you can be up to date with the updates that we have in. But for now, have a profitable week. Like this video, comment, subscribe to my YouTube channel. We are aiming to actually get to 1 million subscribers, and I believe we are going to get there sometime soon. So make sure that you hit the subscribe button. I will see you on the next YouTube video.